Hello, everyone. Welcome back to SnowOnly Plus. Jake Roscoe here. Merry Christmas. We're recording around Christmas time, so really pleased to be joined by Mike Winstanley today. Hi, Mike. How you doing?
Yeah, Merry Christmas to you and everyone else watching this. Don't know why you're watching this at Christmas, but well done anyway.
Yeah, exactly. Whilst you're at home with the family, you might just want to spend a bit of time watching a video on a bit of wealth management and inheritance tax information for the UK. So anyway, here at SnowOnly, we help clients buy ski properties successfully. We have lots of different experts on the channel on the buying process. And luckily today I am joined by, like I said before, Mike. He's going to be discussing all things in UK inheritance tax and a few other bits and bobs as well for over the holidays and how you can get ready for your ski home and what you need to protect in 2026. So without further ado, Mike, would you like to introduce yourself?
Yep. So my name is Mike. I'm a UK regulated wealth manager. And the reason why it's normally relevant that I jump on these calls with you guys is I work with clients all around the world, and many of them own second homes, own we've obviously worked with a lot of clients together who own ski properties, and they either have or they're building like a global lifestyle. I work for a company called Bentley Reid. We're an international wealth manager, so we work with people who've got assets in more than one country, or you've just got a global footprint. You might work abroad, but you've got that global footprint, and you just basically need. We are looking for advice that kind of joins everything together across those borders, really. So our role, and I guess where we kind of sit in this, is we sort of tend to look at you as a client. We look at your sort of wider needs. So things like tax considerations, your estate planning, so what happens when you're gone, and gifting and inheritance and things like that. We look at things like cash flow. So what's your cash flow going to look like before you buy? And then how does that look after you've bought a property? Like if you bought with a mortgage, like what does that mortgage payment look like afterwards? Or if you just bought with a big capital lump sum, how do things look like afterwards? We do a lot of liquidity planning. You're buying a property abroad. A property doesn't matter where it is, it's an illiquid asset. And how does buying an illiquid asset, how does that change the balance of your portfolio? Well, I mean, it will change the balance, but how can you react to it? So ultimately, myself and Bentley Reid, we try and help clients think about, what works alongside that property. You're going to buy it, and it's just how do we support you, in your wider wealth plans from purchasing that property and owning that property over the long term in the most efficient way possible. How does gifting work? How does structuring work? How does everything basically connect together? And effectively, how does that one property just kind of fit in your wider plan? And if there isn't a plan, then we'll help you make one. But anyway, so that's hopefully in a nutshell who we are, who I am, and why we're on the call, really.
Yeah, nice. Perfect. And I think it's super important, like you highlighting all that stuff, because I feel like the other services that we offer here at SnowOnly Plus, they kind of go aligned with the buying process of the house, right? So, you've got foreign exchange, you've got mortgages, you've got notaire, legal advice. Whereas I feel like your services could be, I guess, not overlooked, but they're a bit more complex, right? And some people might not realize that they need them as much as they actually do. So thanks for clarifying everything that you guys do and what you can help our clients with. I've got a few questions for you, Mike. Should we run through some?
Yep, go for it.
Perfect. So this winter, like what should clients be, thinking about how to protect their ski home ready for 2026?
Perfect. Now, when we talk about protecting it, we ain't talking about I'm not talking about buildings insurance, and I'm not talking about actually how do you protect that house. It's much more about protecting the wider consequences of owning that property, not the property itself. So what's some key things to think about? Your UK, and remember, I'm talking to you from the UK. I'm a UK advisor, so everything I'm going to talk about is always going to have, there's going to be some element of a UK exposure to it. Even if we're talking about a property in France, we're talking about a property in Italy or Switzerland or wherever else. So what's your UK tax exposure, if it's relevant? Also, UK inheritance tax on worldwide assets. I'm probably going to say there's a heck of a lot during this call, but UK inheritance tax is now on your worldwide assets. There was a couple of changes in the budget last year, and it was basically reinforced this year. There's your estate is global, even if you are or aren't. And also, I guess another thing to think about with protecting your assets is just like liquidity for the family if something happens to you. And we can go into this in more detail later on. But effectively, I said it before, a property is an illiquid asset. And we are not being Debbie Downers here and saying, don't buy that property. What we're saying is, if you've got something illiquid, how do you protect yourself by having something really liquid that sits alongside it? So we're probably going to talk a bit about insurance as well later on, and how like insurance being a very liquid thing can really complement and sit alongside, I guess something like an illiquid property. One thing, and this is just, I thought I'd throw this one in here. Residents. Most of the people who are going to be watching this call, you're not planning on leaving the UK, or you're not planning on leaving the country that you're resident to buy that second property. It's a second home. There are, though, and I know because we've spoken to a few people together, there are some people out there that are thinking about that. And they are thinking, I'm not just going to buy this place, but I'm going to move as well. And I think that's just something that's a nuance, and it's way too wide for this call. But it's a nuance that you really need to look into and dig into is this a second home, or are you thinking about moving? And if it is the latter, it is a bit more complex. And you do just need to think about your residence position. Just because you buy a place in France, you're still probably resident in the UK, and just really take that into account and make sure that you're going into everything with your eyes open, basically. And I think that really, go back to your question that you asked so long ago, like, what is the way of protecting yourself? Just go into this with your eyes open, basically, and understand what you're buying, understand the complexities. And if you don't understand it, come have a chat and we'll go through it all together. And in that way, avoid some unintended consequences. And again, make sure that purchase fits really comfortably with your overall plan.
Yeah, nice. Really good advice. I think that last bit that you mentioned there, make sure that it aligns with your overall plan is very relevant to our clients, because I know a lot of our clients don't just buy ski homes. We speak to people that have got assets all over the place, right? So even though we are focused on ski property, it's much more important than that. Okay, perfect. So next question: why are liquidity, insurance, and proper coverage so important when owning overseas property as a UK national?
Yeah, and I kind of touched on it earlier on, is you have got something that means a lot to you. You're buying this property abroad. I don't think anyone who goes via SnowOnly leaps into buying a property abroad without not only just having thought about it, but having wanted to do it for quite a while. When I say something's high value to you, I don't just mean it's worth quite a lot of money. I mean, like, it's important to you, and you've obviously gone into it because you have a real desire to do it. At the same time, it is bricks and mortar. It is an illiquid asset. And a lot of the time you already own an illiquid asset. You got a property. If you live in the UK, you probably got a property in the UK. You might have more than one property in the UK. So you're buying another illiquid asset. And where insurance sits in is it is a super simple product. That's what it is. It's a super simple product that can just complement owning that property. Let's go back to what I said before. Inheritance tax is payable on your worldwide assets when you pass away. Okay, so if you pass away, you own a ski property. If you own a property in France, then there is still potentially UK inheritance tax on that property. It's taken into account. Mm-hmm. And tax is due. In UK inheritance tax is due before the beneficiaries can get access to their money. So until they can't inherit their money until they've paid the tax. And then UK probate is then achieved, basically. If you've got an overseas asset, you want to get probate, you want to pay the tax, there are going to be time delays. You're dealing with multi-jurisdictions here on an illiquid asset. There are sometimes going to be more legal processes for your executors to deal with. There are also, and Jake, I know you know this from your background as well, there's simply going to be currency considerations, just simple currency considerations in terms of getting that money over. You need to pay that inheritance tax. You need liquidity. Life insurance is super simple. Once you have purchased the life insurance, and maybe in another call, we'll go through how you go through the application. But once you've got life insurance, and we obviously don't want to kill anyone off on this call, but at the same time, it's about having that peace of mind that if it's there for you, you pass away, it provides immediate liquidity. We're talking a couple of weeks, basically, that money is paid out. Life insurance is put in a trust, so it's not in your estate, so it's not adding to your inheritance tax bill. It's completely outside of your estate as well. And it can basically just run for as long, I guess, as your liability exists on that property. And what I mean by that is if it's going to be, if you think you're going to own that property for the rest of your life, then you should probably buy some whole of life insurance for the inheritance tax liability on that property. So if the property's worth €1 million, and we'll go into what the tax is later on, but it'd be around €400,000 as the tax. You think you're going to own it for the rest of your life, get some 400,000 insurance on that. If you think that's going to be, you're going to own it for maybe 10, 20 years, just get 10, 20 year insurance on that instead. So it works. Insurance works really, really well alongside properties. It really does protect against, I guess, like the long-term value and also the long-term liabilities of inheritance tax. And I guess a way of thinking about it is property provides that long-term value for you. And whatever you consider value to be, be it actual physical money in the bank value or enjoyment, and insurance, it gives you that short-term certainty that goes alongside it. So anyway, that's the idea of insurance, and it's effectively there to protect you, protect your family, give you some peace of mind, and get you to crack on and enjoy your ski chalet.
Yeah, for sure. And unfortunately, you know, the reality is Mark, my colleague, sent me an article the other day saying someone passed away from falling off on the slopes down 300 meters, you know. So unfortunately, every season it does happen, you know. So it is quite important to take that into consideration as well, right? And like you said, it's peace of mind for the family as well, right? Just having that pool of liquidity there ready just in case. I guess next question. Common misunderstandings, would you say, on protecting overseas assets? Maybe we can go into some numbers, like I know you touched on quickly there about how much actual inheritance tax liability there is for UK nationals. But yeah, I don't know if you want to shed some light on that.
Yeah, sure. So I guess start off. Let's talk about. Let's go into what would your IHT UK inheritance tax exposure be? Again, I said this the third time now. Inheritance tax applies on your worldwide assets. That includes overseas properties. It includes your ski homes. You know, Rachel Reeves hasn't stopped. You know, hasn't put one thing in saying it's not on a property. It's on everything. And the standard UK rate is 40%. You do have allowances. Okay, you do have what's called a nil rate band available to you and potentially to your spouse that can help reduce that to a certain extent. There's £325,000 per person that's available. There is another allowance that could be available to you. It may be between you and your spouse up to £1 million total, or it could be less. It really is dependent on your overall asset picture, what you can actually get. So it can actually be a bit more of a complicated answer than just simply it's £325,000 each, potentially £1 million as a couple. I think in terms of what you talked about, common misconceptions, a lot of people don't, I guess, assume that foreign property is subject to UK inheritance tax. Some people, we talked before about residence. So some people might be thinking, I'm going to leave the UK. I'm going to get out of it. I'm going to buy this property. I'm not going to live in the UK anymore. So as soon as I've left the UK and I don't own a property in the UK anymore, I'm outside of the inheritance tax net. That's not true. So in reality, they aren't. If someone has lived in the UK for the long term, then they're going to remain within the UK inheritance tax net even if they leave, and that can apply for up to 10 years. So I think misconceptions or common misconceptions with inheritance tax is that it's often not well understood until it's a little bit too late. And so that's why planning and liquidity planning, and I think you and I talk about this quite a lot actually, is when we talk about things like getting insurance, when's the right time for someone to get insurance? And I think you and I talk about this quite a lot with people, and we talk about it together as well. And to be perfectly honest, regardless of whether you are buying a property abroad or whether or not you're not buying that property abroad, you have that UK inheritance tax liability. If you know you're going to do it, unless you're going to somehow just spend that money on things that reduce the value of your estate, you've got that liability. For me, it makes sense to just get that protection as soon as possible. I think one of the things I do say to clients quite a lot of the time, they laugh, but I always wonder if they actually appreciate it or not, is you are the youngest and you are the healthiest you are probably ever going to be right now. So if you're thinking about, should I do this now or should I wait a couple of years? I mean, you talked a minute ago about, like you read a story about someone having a horrible accident. Like, unfortunately, in my line of work, I cannot tell you the amount of times when you've had those conversations with people about potentially getting life insurance and they've considered it. And unfortunately, something has then happened to them, which, we're not saying terrible things, but it has either caused the cost of that insurance to drastically increase, whereas they could have fixed in at a much lower rate, or in some cases, they were no longer able to buy insurance because that thing precluded them from getting insurance. So yeah, I think really those common misconceptions are because it's abroad, it's outside of the inheritance tax net, or I don't live in the UK anymore, so I'm not part of that, or I'm just going to deal with it later on, basically. So yeah.
Yeah, nice. And yeah, moving on swiftly. We've got a few clients at the moment that we're working on together. What would you say differentiates yourself and Bentley Reid from some other providers, UK providers, I guess?
Yeah, I mean, obviously, like I always want to think it's my sort of personality and charm, but there's probably just a few more practical things. Honestly, we work with clients who are international. Like, that's our bread and butter. We started off as a Hong Kong company in the late 1970s, early 1980s. We worked originally with UK expats out in Hong Kong, who had, I guess, intentionally, unintentionally created that global footprint. And that's, I guess, our genius. That's where we came from, and that's how we've grown and we've expanded over time. That's where all of our knowledge and experience comes from. So people who have second homes, ski properties, they work or they live in multiple countries, or they've got family dotted all around the world, you're really not the exception to our rule. You're pretty common in there. And I think this isn't what differentiates us from other wealth managers. I think every wealth manager should try and do this, but the focus is just on joined up planning. It's not isolated advice. So, if we think about family and estate planning and we think about insurance, I've talked about insurance quite a bit. If we think about insurance, like, how does that property fit into your plan? How does insurance fit into your plan? How are you paying for that insurance? Where should that insurance be? Should that be UK insurance? Should that be international insurance? Do we need to set up potentially a yielding investment that can pay the premiums for you so that you don't even need to have, I guess, earned income paying those premiums? How does your will in the UK, we don't write wills, but we work with lots of local will writers in different jurisdictions who can assist with that. How does your will in one jurisdiction affect the other one? Do you need tax advice in this jurisdiction? We try and bring it all together, and we try and work with lots of local and international actors, basically, to try and get the right answer for you. We to a certain extent try and be that sort of central point of the structure. We try and make sure that things don't contradict each other. And ultimately, these are all words, unless ultimately what we're trying to do, just help you try and see the full picture so you know what you're doing, you get the right answer.
Yeah, perfect. Amazing. Because I know we've had a couple of clients that, before speaking to you, were getting I don't want to say misinformation, but maybe not the information that they were looking for, right? Or not as good as they were hoping for, I guess. And then
I think the people that we've spoken to, I think it's just it just sometimes highlights. I don't think they'd received the wrong information. I think no one. It's just buying a property overseas and just thinking about potentially the tax side of things. It's like someone spins you around and then just stops you and goes, right, go buy that property. And actually, I think what you need is, once someone's spun you around, just to stop and just
take a step back.
You know, a lot of the time when we speak to people, they don't even know. I think from the tax perspective, you don't know what's the first thing you need to know about the tax. Like, how do you even get into that side of the conversation? So when you and I have spoken to those people, it's been, I think you've had the same experience as me. There's so much relief that they have from speaking to you. They finally feel like someone is there who is able to understand what they're doing, and you can basically put them on the first step of that plan to then get the answers they need, get the clarity they need, so that when they're buying this property, they're not worried all the way through. What have I done? What am I doing? They've got that peace of mind. They've got the confidence and the clarity. They know what they're doing from a tax perspective, alongside all the other services that you provide.
For sure. And that's very important. Like you said, clarity and just having everything clear and everything, all the ducks in a row, and understanding all the information as best as possible for our clients, especially along, a lot of our clients are buying overseas for the first time, as you know, Mike. So super important for the clients. So on a previous video with my colleague Mark, we were talking about our traffic on site coming from UK was actually number three country, but we were getting a lot of traffic from the US and also China as well. So is it only UK residents that you help, or can you help international clients as well, buying in Europe or in Asia? Tell us a bit about that.
Well, number one, like, you guys are the property experts here. So in terms of helping anyone to buy, we always defer that over to you guys. And in terms of where our expertise are, like, I'm not going to lie, like, we're definitely UK focused. But what we can really help people with is that sort of, if you're looking for that sort of international, I guess, like insurance and estate planning side of things, if you're looking for assistance with people who have been there, seen it, done it, knowledge and experience in setting up international insurance wrappers, then we're there and we're able to help, and we're very happy to, basically. So really happy to help. And we do have that sort of that global international footprint where we can support people from all around the world.
Yeah, perfect. Amazing. Okay. Well, that's kind of it from me. I don't think I've got any more questions. I don't know if there's anything else from you, Mike, before we leave. But if not, then we'll probably wrap it up here. I don't want to take up too much of your time.
No, it's been an absolute pleasure to speak with you as ever, Jake. And wishing you and everyone watching Merry Christmas.
Yeah, Merry Christmas, everyone. If you've watched this far, thank you very much. 23 minutes, so apologies for the long video. We're going to be, as always, on a weekly basis, having experts on the channel. So feel free to subscribe, like all the YouTube jazz. That's me now. We've also got a 5-step guide that you can download in the link below, which the lead will come straight into me. And if you need some help from Mike or any one of our other services, then feel free to download that guide. It's a super useful tool for the upcoming ski season. So everyone, have a lovely Christmas and a happy New Year if you celebrate Christmas. And I'll be back in the new year with some more videos. Thank you very much, Mike.
Cheers, Jake. All the best.
Take care.
Cheers, bye.